You are listening to the Cresco Wealthcast, a podcast brought to you by Cresco Wealth Management of Wellington Altus Private Wealth. I'm your host, Dimitri Karolis, and I wanted to bring a podcast from the world of wealth that was really just easy to follow. And from time to time, I'm going to be bringing in members of the team. We'll be bringing in external guests and really providing some good information that are inspired from those coffee talk conversations that not just we're having, but that you're having as well. You can follow the podcast on www.cresco.podbean.com, or if you're on Spotify, you can just search for the Cresco Wealthcast. And last but not least, please do not forget to subscribe to my channel on Instagram, which is at The Finance Greek. We're back with another episode of the Cresco Wealthcast. Today I have Wayne Boer, Senior Financial Planner within Cresco Wealth Management. And bringing Wayne in today is to talk about insurance. Now, what we're going to do with this episode here is really just do a broad overview because, Wayne, I know there's a lot that can go down, so we don't want to overwhelm the listeners. But today we're going to focus on really just broad stroke, general insurance when it comes to planning. And the first question, I guess, that I have for you, first overview is, how should we be viewing insurance? Is insurance a product? Should insurance be a solution? And when should we be looking at it and the view?
Yeah, thanks, Dimitri. It's always great to join you here. Insurance to me is a tool. It has to serve a purpose in everyone's financial plan. I think that insurance needs to be a solution to a known issue. So having insurance just for the sake of having it in there, not everybody needs insurance. No. Not everybody should have it. But what's going to factor in really is what stage of life are you in? What happens if you lose an income? What are the repercussions of that? Those are some of the risk mitigation reasons why we might have insurance and why it might play a role in someone's wealth plan. The other end of the spectrum sometimes comes down to, are there tax things we have, tax liabilities we have to plan for? Is there a way that insurance can be used to enhance someone's estate on an after-tax basis? Again, every situation is a little bit different. Insurance doesn't always make sense for everybody, but I find when it does make sense, it's a really effective and important tool.
Now, outside of the cheap generic plug for me to say, listen, you got to talk to Wayne, you got to talk to Cresco so we can help navigate and guide this. But how does one start? Because, with insurance, let's just call it what it is. You talk to an insurance agent or an insurance company, they'll find something for you. And there's all this jargon that they throw around. If it's, oh, you should do a whole life or a term policy or this or that. You get lost in it, and it almost feels like there's always this big product push. So, what should people be looking for when you say, listen, if you're hearing these things, this is why you need to come talk to a wealth management company as opposed to just finding insurance?
Great question, Dimitri. I do know that when I'm looking at something that I maybe don't understand, a lot of options can be difficult to understand. So that's where I think having some form of a needs analysis done first is step one. That can be either a standalone needs analysis that just takes a look at what happens if you pass away. And in some cases, it might need to be a bigger thing, like an overall comprehensive wealth plan that looks at your taxes, your estate plan, things like that. A good needs analysis, just for anyone who's listening, should take a look at things like what are my actual costs if I pass away? What are my final expenses? Are there things that I want to save up for? Maybe my children's education, things like that, some lump sum expenses on top of the regular funeral expenses, things like that. What's the loss of my income? What does that mean for my family, my beneficiaries, the people who depend on me? What sort of other income sources are my beneficiaries going to have? Will my surviving partner have an income? Will that be enough? Will there be government supports through CPP that are going to help my beneficiaries and my dependents survive? All these things need to be considered. And it can be a lot. I'll admit it can be a lot. But we do have tools that help us sort through that, quantify the need, and then we can make good recommendations based on that, on not only types of insurance policies, but amounts of coverage to put in place.
Yeah, absolutely. Because you have these conversations, right, with people, and everyone compares notes with whatever it is. And one doesn't know if you're overinsured, if you're underinsured, if you have the right one. Like an example that comes to mind is how are you with insurance? Oh, no, I'm okay. I got it through work.
Mm-hmm.
And you say, okay, but is that a solution, right? Because our approach is for planning, and I think that's what I want to stress the most for today's podcast is that insurance is a planning tool that should have a solution to it. So when you hear those things, I'm sure you get it a lot more than me. Yeah, I have a policy at work. I'm all good. Don't worry. Are we though?
Yeah. So to that point, there's two things I want to say. One is I want to talk about the group side of things, but also sometimes just because we put something in place at one point in time, we can't assume that that's going to be the best plan for us forever. I mean, I've sat down with families who've done insurance planning 5-7 years ago, and they put the right amount in place for them at that point in time. But as anyone who's listening knows, those needs always change. We may have another child. We may upgrade our home and have a larger mortgage, and we want to take care of that. Maybe just inflation's caught up, and what that previous insurance could provide if someone passed away just isn't enough for what our expenses are today. So that's why a regular review is so important. So that's the first thing I want to touch on there.
Great point, Wayne.
The second thing is it's easy to say I have group coverage, but we have to keep in mind that group coverage is put together by our employers for their employees. It's not necessarily going to be the best solution for everybody. What I mean by that, if you change jobs, you may not have insurance anymore. Some of the definitions in certain types of policies that are offered through group plans, like disability, long-term disability, for example, they might not be as good as what you can get in a personal one. And so relying just on that layer of insurance without looking at it on your own with personal policies as well, I don't think is the best strategy.
Interesting. Good. Okay. Let's go through some of the different types because, again, for myself, and I think I speak for many of the listeners, term, whole life, universal, so on and so forth. What do these things actually mean?
Okay.
Right. And so maybe if you want to go through a quick fire, because I think we're going to do a series of these podcasts where we really dive deeper, and some of the listeners might be throwing us some questions or even clients that we have. But let's just maybe for today go through a general overview, types of insurance, what they mean, and we can let questions come after.
Sure. So I'm going to focus today on life and accident sickness. So we're not going to talk about insurance like home, auto, stuff
Perfect.
like that.
Okay.
So I would say there's three primary types of policies that I would break insurance down into when it comes to that. One is going to be insuring a life. One is going to be insuring against an illness or a sickness. And then the final one will be insuring against a disability or a loss of income.
Okay.
So we'd call that life insurance, critical illness insurance, and then disability insurance. Now, within those, there's different subcategories. So within life insurance, we might see your basic term life insurance. And so term life insurance is kind of like rental insurance. It's you're paying the minimum premium possible for as much coverage as you can get. You can also have a couple types of permanent insurance. So it's not really rental insurance anymore. You're buying that insurance to keep it for the rest of your life.
Okay.
Now, on account of that, it's more expensive. There's often more features built into it, and it's more important to have a proper needs analysis done to make sure you're getting the right type of product. But we have whole life policies, and then there's also universal life policies that factor into there. And there's again different subcategories of that, but I'll save that for another time.
Yeah, fair point.
So now let's go over to the critical illness policy. There, again, that's something that will cover you against certain types of illnesses, diseases, your cancers, your strokes, comas, blindness, things like that. That pays you a lump sum benefit if you have one of those covered conditions, basically.
Okay.
You can then do whatever you want with that lump sum, whether it's seek medical treatment elsewhere, offset a loss of income, renovate your home if you've had a stroke or you're paralyzed, things like that. So it's a lump sum that you can do whatever you want with, similar to what life insurance does. I don't think I mentioned that, but life insurance will typically give you a lump sum benefit if you pass away. Not typically, that's what it does. The third type of insurance that I wanted to mention there, Dimitri, is disability. So this is a loss of an income. Now that can be due to an illness that's covered under your critical illness policy. But the difference with the disability policy is that it doesn't give you that lump sum benefit. It gives you a tax-free monthly benefit to replace your lost income. So if you were making, I don't know, $7,000 a month gross, you might get insurance, disability insurance, that gives you a smaller amount on a tax-free basis so that your family can still pay its mortgage, put food on the table, clothes for your kids, things like that. So that's kind of how I would break that down. If I'm going to go one step further without going too into the weeds,
Okay.
when we start talking about terms, we can talk about term insurance versus permanent insurance. When we talk about term, all that means is that's the period of time that your premiums are level for. So within life insurance, within critical illness, you will have terms. It could be a 10-year term, which means for the first 10 years of the policy, your premiums are at one level. Then it resets at a higher level for another 10-year term. So those terms can be 10 years, 15 years, 20 years, you name it. It could be a term to your age 65, depending on the issuer. You have a lot of options when you put it in place. So we compare that with a permanent policy that might have level premiums for life. There's a whole bunch of different ways you can cut that pie.
Yeah, and we had a good conversation. Just so happens you and I with Chris on the team with the respective clients, really dissecting that term insurance and what happens, and we'll get into renewals and the nitty gritty and policies. I think this is great for today, and thank you for clarifying that, because even those terms, when you say disability, critical illness, life insurance as a blanket whole, sometimes we don't know what it means to us until we know what it means to us or explain. Some say, well, I don't need critical illness. I just went to the doctor. I'm pretty healthy. We're good. Or I don't need disability. I mean, I'm self-employed, and there's all of these things. So I appreciate the overview. Why don't we leave that for today? I think for the next episodes, we'll dive deeper into those subcategories. Unless there's any closing remarks or things that we should leave the listeners for a food for thought or anything on your end.
Yeah, I think that mostly covers the high level stuff. The only thing I'll add to it that we'll tackle in another conversation, Dimitri, is once you start getting into these policies, there's all sorts of features and options and benefits that you can have in a personally owned policy that you won't find in say a group policy. And I think some of those things are important and they add serious value.
Yeah. Okay. Good to know. Well, thank you very much for your time, Wayne. It was great. And you too, Vicky. Thank you for your time today. Should we get you on the podcast? No, we're good. Okay, hard stop. Anyways, don't forget, you can subscribe to the channels, cresco.podbean.com, as well as Spotify, and you can follow at The Finance Greek and at Cresco Wealth Management on the Instagrams. Thank you very much for your time this week.